made at the FOMC meetings. In this video, we'll explore the connection between FOMC meetings and the precious metals market. Let's get started. The first key factor that has an effect on the price of gold is interest rates. The FOMC is a key decision-making body within the Federal Reserve System of the United States. The FOMC stands for the Federal Open Markets Committee. Its primary responsibility is to determine the nation's monetary policy, which includes setting up interest rates and managing the supply of money in the economy. One of the major ways FOMC impacts the price of gold is through its influence on interest rates. During FOMC meetings, committee members discuss and assess economic conditions, such as inflation, employment levels, and GDP growth. Based on these evaluations, they may decide to raise, lower, or maintain interest rates. When the FOMC decides to lower interest rates, it generally stimulates borrowing and spending, which can boost economic activity. This can lead to increased investor confidence and a greater appetite for riskier assets, such as stocks. As a result, the demand for precious metals like silver and gold may decrease, causing the prices to potentially decline. Lower interest rates, investors seek riskier assets, such as stocks and cryptos. Conversely, when the FOMC chooses to raise interest rates, it can have a dampening effect on borrowing and spending. Higher interest rates can make borrowing more expensive, reducing consumer and business activity. During these periods, such as the time we're in, investors seek safe haven assets like silver and gold, driving up the demand and increasing the price of the commodity. When the Feds keep raising interest rates, investors seek safe haven assets such as silver and gold, so the price will go up. The second and final key point is policy outlook. Another major aspect of the FOMC meetings is the communication of its decisions and policy outlook. After each meeting, the Federal Reserve releases a statement and Jerome Powell holds a press conference. These public announcements provide insight into the committee's thinking and can significantly impact market sentiment. Sentiment is extremely important. This is the overall attitude that investors feel about the market. Financial markets closely monitor FOMC statements and press conferences for any indication of future interest rate changes or shift in monetary policy. Bloomberg and many other financial news outlets ask questions at the end, probing for direction of the market. If the committee signals a more accommodative stance, indicating potential future rate cuts, it can lead to increased investor optimism and a positive effect on the price of gold. So potential rate cuts can lead to higher prices of gold and silver. On the other hand, if the FOMC hints at tightening monetary policy, this can suggest potential rate hikes, and it can cause market participants to become more cautious. This can lead to a decrease in demand for riskier assets and a shift towards safer investments, like precious metals. Precious metals such as silver and gold have many use cases when investors seek safe haven assets. In conclusion, FOMC meetings and decisions have a significant impact on the price of gold. Through its management of interest rates and communication of policy outlook, the committee influences investor behavior and market sentiment, which in turn affects the demand and price of precious metals. Until next time, thank you for watching episode number 4. I hope this video has provided you with a better understanding of how FOMC meetings influence the price of gold. If you have any further questions or